Hi everybody, this is Aphria from MyChartCoach.com. And in this video, we're going to take a look at the Canadian marijuana sector. Okay, now there was some news that came out over the weekend on January 12th. You can see there's a new bill in Congress that would ban federal cannabis enforcement in legal states. This is the lady who introduced the bill, Representative Barbara Lee out of California. So yeah, I recommend you going and reading this article. This could be what saves the marijuana sector. So we will see that they needed this. So yeah, it's been under pressure since Sessions took away the Cole memo. And so now this could be what helps create the bounce. It's perfect timing. Now once we look at the charts, you will see why. Now I know this is the Canadian marijuana sector, but it is also being affected by the marijuana or by the United States. What's happening with the marijuana policy in the United States definitely affects Canada, and so there was a breakdown in the Canadian markets as well, with the U.S. markets being under pressure. So basically, we had this big pullback. It was a multi-day drop last week. As you can see here, this is Canopy growth. So we're going to start with the best, and we're going to work our way down. And first, we have TWMJF, ticker symbol WEED on the Toronto Stock Exchange. And as you can see here, it closed down 13% on Friday. It's on a 3-day pullback. It did close below EMA4 on Thursday. That was a red flag. And then you can see here on Friday, it closed below EMA's 8 and 13. Now there was a lower wick on Friday's candle, and the key support level to hold now is the middle Bollinger Band. This is going to be the key level on all the charts that I show you. They were all in strong uptrends. They pulled back, and now they're all testing the middle Bollinger Band. The middle Bollinger Band is also the 20-day simple moving average. So for TWMJF, if it can stay above 23.39, then that would be the reload level for the bounce, and then it would still be in play. If it closes below 23 and 23 turns into resistance, then we're going to be looking for a drop down to the 50-day simple moving average at 18. That would be the next reload target. So it has to hold 23. If once it gets back above 29, that's EMA4. That's when it could get the strong uptrend going again. The high close is up here near 34 at on the closing price on the 9th. Notice the big volume on Friday. There was a huge volume spike. Well, I'm going to show you the weekly charts for all of these marijuana sector plays, and so you're going to see what's happening on the weekly chart. First up for TWMJF, look at accumulation distribution. Check out the huge spike down last week. So they dumped a lot of shares last week. If you look here, yeah, let's look at the weekly candle. If you look up here, look at the long upper wick on last week's candle. So it ran all the way up to 36 up there to that all-time high, and it pulled all the way back below 28. That was a very bearish move. So that was just lots of profit taking up here. That created a spike down on accumulation distribution. The big level to hold once again is 23. If EMA4 2382 is holding, the uptrend is intact. Notice how there has not been a close below EMA4 until you go all the way down here until July. So the last close below EMA4 on the weekly chart for Canopy growth was back in July. So as long as that level is holding for the longer term players, the longer term investors, the swing traders or whatever that are holding longer term, if that level is holding, the signal is to keep riding. If there's a close below, that would be a big bearish change in trend since it's been holding since July, and that's when you could see a pullback down to EMA8 at 20. Okay, so yeah, notice the big volume. It was like the all-time biggest volume week for Canopy growth, and they were dumping shares. So keep that in mind. There was big profit taking up there. Look at that huge spike down. Okay, now let's look at Aurora Cannabis. I should have posted the news, but yeah, they are under attack by the CMED. Well, the company that they are trying to buy out is now counter suing them. I believe it was for like $700 million. So yeah, this is a big deal, and ACBFF is under pressure right now. The stock was down nearly 15% on Friday. Notice that it's down 4 days in a row. So all last week was just a bloodbath. It formed the black candle on Monday. That was your signal that there was some indecision here and that it might cool down. And then multiple red candles. Notice that on Thursday it closed below EMA's 4 and 8. That signaled more downside risk. Now it got a bounce off the middle Bollinger Band currently at 793 on Friday. That's the middle Bollinger Band. It has to hold that level. If that breaks, you're going to probably see a drop down to the 50-day simple moving average down here at 6. So if it can hold that middle Bollinger Band, it can keep the uptrend going. Notice the last time it worked down to the middle Bollinger Band, it traded sideways for a couple weeks. So, you could see some consolidation here. There was a big volume spike on Friday. Some red flags are, look at PSAR here. The green dots flipped above the candles. That's a red flag. You have a Fasto below 50. You want to see RSI stay above 50 if you're a bull. Down here, look at MACD. It's pinched on the 12, 26, and 9, and there was already a crossover in the 8, 13, and 5. All signals that the chart's cooling down, so it has to hold that middle Bollinger Band on the daily chart. Now let's take a look at the weekly chart. Closed down 21% for the week, nearly 22% for the week. It did form a bearish pattern this last week. Notice the red candle engulfs the previous white candle. Notice how it's larger than the previous white candle. And so this formed bearish engulfing reversal pattern. And so this is a very strong reversal pattern on the weekly chart. Yeah, I recommend you going back and checking that out. This is one of the stronger patterns. It's hitting EMA4 currently at 814. That's your big level. So if you see it drop below 814 on Tuesday, and that turns into resistance, you're going to likely see a drop down to 7. That's EMA8. It can't turn the EMA4 into resistance. Otherwise, it's going to be a bearish change in trend. As you can see here, all these candles closed above EMA4. The last close below were these two candles back in October, and it held EMA8. And so, it'll signal that the chart is, really cooling down if you see a break below that level. So keep an eye on, that 814 level coming into this week. Now let's look at APHQF. Okay, yeah, this was under pressure as well last week. Closed down 12% on Friday. As you can see here, there was a gap down between Thursday and Friday. So notice the low of day on Thursday is the top of the gap, and high of day on Friday is the bottom of the gap. So if it does bounce here, notice it's hitting the middle Bollinger Band. Once again, all these charts are the same. They were all running up the same. Notice that APHQF started a really strong uptrend again, after pulling below the middle Bollinger Band back here in the end of September when it closed above, and it was just riding the moving averages higher. And then now that's broken, and now it's below EMA's 4, 8, and 13. It has to get back above. It needs to turn 16 into support. If it fails to get back above 16, that's going to be a red flag. So it needs to be above 16, and it needs to hold 14. If you see it drop below 14 and close below 14 next week, that's going to signal downside risk, and you could see a drop all the way down to the 50-day simple moving average down there at 1056. Okay, now look at the APHQF weekly chart. Okay, yeah, this had formed a bearish pattern, not just this last week, but the week before was the red flag. And it looks like it might have even had bearish 3 gap ups before then. I mean, this was really frothy, right? It had multiple white candles in a row, multiple gap ups, and then the red flag was last week. Notice how a doji formed. So when you get a doji formed during an uptrend after a gap up open, I know it formed down here and it kept going higher, but it is a red flag just to keep an eye out for a possible bearish, for a red candle forming a reversal pattern. Notice last week there was a big volume spike, and then now this week you have the red candle that formed. What that was last week was the bearish doji star reversal pattern. I mean, maybe if you don't say that's a doji, you thought maybe that wasn't quite a doji, then you could say that it was the bearish evening star. So they're both very similar. Just one, it's the same pattern. Basically, one's a doji and one's a normal small candle. But the bottom line is it's the same type of pattern here. Just basically, it's signaling that the bears are strong right now. The downside risk. Notice there's the big pullback from 20. Once again, you have the profit taking off of the high of week. Now EMA4 at 1390 is the key level to hold. If it can hold that pink line, that the uptrend's still intact, and it can totally do that. Now, if you look back here in October when EMA4 support broke, it did drop down to EMA13, and if that followed that same sort of pattern, you're looking at a drop all the way down to 1069. The weekly chart can still stay strong and it can consolidate, bounce off, and continue higher. It's just a matter of whether or not you want to hold for the pullback. It's all going to be a matter of whether or not it stays above 14. Drops below that 1390 level, and that will likely signal consolidation. Okay, let's look at MEDFF here. So I want to show you the, a lot of times we're talking about the bearish signal for accumulation distribution, and so for this one I want to show you a bullish divergence. So notice how MEDFF was down 7% on Friday, right? So it was down. It has multiple red candles in a row. It was under immense pressure, basically all last week, and then notice there was a giant, there was a big volume spike on Friday, but look at the lower wick on Friday's candle. Huge lower wick. There was big loading off of 15 support, such big loading that they drove it all the way back above that middle Bollinger Band at 17, which is the key level to hold. As long as MEDFF stays above 17, the uptrend's intact and it's still in play. It has to get back above EMAs 4 and 8. It needs to get back above 20. If you see it above 20, that signals, okay, the chart's looking good again, it's looking strong, ready to go. If it fails to break that 19 to 20 resistance zone, that's going to be a red flag, and it's a super red flag if it drops below 17. Drop below 17, and we're looking at the 50-day simple moving average at 14 as the next level, likely to be tested. And so what we're looking at with this long lower wick on Friday's candle, it was almost a hammer here. I mean, you could call that a hammer, I guess. That body is kind of big for a hammer, but it is multiple red candles, gap down. You've got a big red candle. Notice that there was an uptick in accumulation distribution. So even though it was down on the day, accumulation distribution spiked up. You have a spike up on a CMF. It was actually larger than the previous histogram bar. And so what this is signaling is that people were loading. Even though it was down on the day, and even though there was a red candle that formed, this long lower wick and the spike up in accumulation distribution is signaling people loaded for the bounce. So we talk a lot about the bearish signals for accumulation distribution, the long upper wick on the candle showing dilution, but you can also, it's a cool indicator to use to signal a bullish divergence when actually on a down day people are actually loading. So yeah, take note of that. And then if we look at the MEDFF weekly chart, or 15-minute chart, I want to show you the 15-minute chart on this one because I want to show you the loading. Notice the pullback, and then look at the big volume bars down at the bottom of the chart. So you have, this is a 3-day chart, and each candle is 15 minutes of trading. Notice the big loading off the bottom. There's a big volume bar, and so people, loaded that down there. It got back above. It's above the middle Bollinger Band. If it can get back above the 50 simple moving average at 1859 and turn it into support, that'll signal it's in play. It has to finally get above the 200 simple moving average at 21. That's the top moving average on that chart. Once it turns that level into support, that's when the chart will be strong again, and you can signal it's heading higher. If it fails to get above that 50 simple moving average and struggles at 1850, that'll be a red flag, and you could see some consolidation. Now look at the MEDFF weekly chart. As you can see here, it looks to me like there was already a bearish 3 gap ups reversal pattern had formed. Notice here, bearish 3 gap ups. That's when you have multiple gaps in the uptrend. There's a white candle followed by 3 gaps in a row. Gap up opens. A gap up open is when the share price closes above the previous close, and so it creates a space on the chart. And so as you can see here, there's 1, 2, 3 gaps and then the red candle this week. So it looks like the bearish 3 gap ups reversal pattern was confirmed this week. That's how I'm reading the chart. I think I'm right. Yeah, and so if you look here, the big red candle with the big red volume bar, it has to hold EMA4 at 1762. If you see it drop below EMA4 at 762, that'll be a big red flag, especially if it closes below for the week. I mean, this has only been trading since back here in June, and it's been very bullish the entire time. So, there's a small close below EMA4 December, but yeah, if it closed down near EMA8, down at 15.7, that would be a very bearish change in trend, and it could signal more consolidation is coming. Okay, let's look at, and the inverse of that for all these charts. If they hold the EMA4 and they hold support, the chart's still strong. They can pull back, test support, hold it, and then continue higher. We just have to see how it plays out. This is a really crucial week for the Canadian marijuana stocks. Okay, let's look at PRMCF. MEDFF. Okay, this closed down 19% for the week. As you can see here, it had multiple red candles in a row, and once again, it's hitting the middle Bollinger Band. It needs to hold the middle Bollinger Band at 678. If you see it drop below 678, that's going to signal downside risk. To the upside, it has to get above the 868. Above 868, that signals the chart strong, and then it could run back up to 11. It needs to break out, make a new high close above 11 to signal it wants to head higher. If it drops below that 678, for all of these, I'll be shooting for the 50-day simple moving average. That's the next big support level. They're likely to drop down there, and then if tested, those levels are likely to create a nice bounce, technical bounce. Now, keep in mind, if these, if this, bullish development for if this development over here comes into fruition, it should be a good development for the for the marijuana sector stocks, including the Canadian stocks, and so we could see a bounce off the middle Bollinger Band. And if that happens, keep in mind that the middle Bollinger Band is the bottom of the bullish upper Bollinger Band channel, and so it is the low load level, meaning it is a good entry point if support holds. So if it comes down here and tests 678 and it holds, that would be a good low re-entry point after a pullback. But you have to be very careful, because if it breaks, you have to use it as your stop loss level, because you don't want to hold if it closes below and turns into resistance. So it's always a really fine line when you're trying to nail that low re-entry. Just keep in mind that you have to be vigilant, and if it closes below and the middle Bollinger Band turns into resistance, you have to exit quickly if you tried to get in. Just throwing that out there. It's like, you have to just be careful trying to get that re-entry and then having the chart break down further. That's all I'm saying. Just looking out for everybody. If you look here at the chart here for the PRMCF weekly chart, you can see it had the huge spike down in accumulation distribution last week. Look at that. I mean, it had the big work up, and then bam, it had the big spike down. So yeah, so that was they had a giant, look at the volume bar last week. So a lot of these companies, it looks like they used this push last week to the all-time highs. Notice that all these are making all-time highs, and they sold off. Look at the long upper wicks. They all have the same pattern. That is not a good sign. That's a sign that they were locking in gains. Keep in mind, big money locks in gains at the top, right? And so you have the big volume bar at the top and then the pullback, and so that could be a signal that these are going to take a temporary pause, and maybe they've hit their temporary peak, because it's going to take these people, the people with the big money, to keep buying to push it higher. So we'll just see what happens. It is, we always look for the climax spikes, and we look for them on multiple time frames. So you look for it on the weekly chart as well. And this is the climax spike. You have the multiple green candles building up, and then boom, you have the pullback from high of day. You have the big volume bar. It's all the whole climax spike signal. And so it has to stay above 686. If EMA4 support breaks this week and you see it drop below that level, that's going to be a red flag and signal weakness. Now I'm going to try to maybe cruise through these last ones a little bit quicker. Let's look at IMLFF. Okay, so it closed up 4% on the week. Okay, so notice how this one came all the way down and hit the middle Bollinger Band, and then it closed below on Thursday, and so on Friday there was a bounce. And so this is what we're looking for the other ones that haven't bounced yet. This was under pressure sooner. It had already been down 4 days in a row. It was like the worst of breed had already been under pressure first. And so what we want to see now is IMLFF hold that middle Bollinger Band, currently at 110. So if it can stay above 110, there's a gap up here up to about 129, and we look for it to fill the gap and get back above EMA8. If that 110 turns into resistance, the downside risk is it drops down to that 50-day simple moving average at 77. Notice that there's been really good volume. If you look at the weekly chart, this did form the bearish engulfing reversal pattern. This candle is engulfing the previous candle. There was a close below EMA4. So the first charts that I showed you were the best of breed, and they're holding up better. And now we're getting into some of the ones that aren't the best of breed. It's going down the line, and so that they when you get to the weaker stocks in the sector, they break down sooner. And so notice this had closed below EMA4. If EMA4 at 116 turns into resistance, that's going to be a red flag. It bounced off of EMA8 at 98 and needs to stay above $1. It'll be a big red flag if IMLFF drops below $1 next week. Okay, let's look at BLOZF. This is the marijuana breathalyzer company. You know, it pulled back and it bounced off that middle Bollinger Band. Notice the lower wick off of the 206 support zone that shows loading. People are loading, so it just needs to hold. That was a good job, everybody that tried to load off of that level. You know, that's the reload level. It just has to hold. If it breaks, then you could see a drop down to the 50-day simple moving average at 150 or 144. If it holds, then you want to see it close back above 245, and then it's that high close up there in the 280s is the key level to break. If you look at the BLOZF weekly chart, this is another reversal pattern. We're going through all the different reversal patterns here, and so this is the bearish dark cloud cover. So bearish dark cloud cover formed last week. And for all the bearish patterns that I'm showing you, we'll be looking for bearish reversal confirmation this week. And so it will have to form a red candle and a lower close for the week to signal confirmation. And so I'll be doing updates through the week to see if you know, they form a white candle and they bounce, or are they going to form another red candle and confirm these reversal patterns. That is not what, you know, people that are bullish on the marijuana sector want to see. You do not want to see red candles on the weekly charts next week, because it's going to confirm these reversal patterns. They haven't confirmed on these strong runs, so it'll be a bearish change in trend, and we could see some consolidation for the sector. So BLOZF needs to hold the EMA4 at 211. If that level breaks and there's a close below, you could see a drop to EMA8 at 178. Okay, let's look at NXTTF. All right, so this pulled back on the daily chart to that middle Bollinger Band. It had that lower wick. There are people loading off of 180. It did close below the middle Bollinger Band on Friday. That was a red flag. It has to get above 217. If 217 turns into resistance, it could signal the start of a new downtrend. For all these stocks that I'm showing you that are below EMAs 4, 8, and 13, if those levels turn into resistance, it's a signal that the bears are in control, and that you know, that's where people short, and they keep riding lower. It has to close above those three levels and turn it into support to get an uptrend going. If candles are forming below EMA 4, you know, that signals it is a risk to hold. And now look over here at, you know, 115 would be the potential downside risk. You know, you could see a drop from $2 all the way down to 115 if that middle Bollinger Band turns into resistance. If you look at the weekly chart, you will see here that we have another bearish 3 gap ups reversal pattern that had formed. And then what we had this week was the confirmation. So it had the multiple gap ups, right? And then this last week, a red candle formed that confirmed the pattern. So this actually had a bearish reversal confirmation. It did hold EMA4 at 209. It has to stay above that level. If it breaks below, then you're looking at down here at EMA8 at 167 as the next key support level to hold. Since NXTTF has been running, you know, it has not closed below EMA4. So a close below would be a bearish change in trend. Notice this is the first red candle that formed since the big uptrend, and it's the first bearish reversal pattern that you know, formed here with the bearish 3 gap ups and was confirmed on this weekly chart since the big breakout when it had news that it signed a deal with Canopy growth and you know, started getting some action with the bigger players. Okay, let's look at OGRMF. All right, so yeah, this is another one that pulled back. It hit that middle Bollinger Band. It's bouncing off. Notice how back here it bounced off the dotted purple line, you know, and held. That's what you want to see here if you're a bull. You want to see 340 hold. Notice down here when it broke below the middle Bollinger Band, it came down to the 50-day simple moving average. That's why I'm saying for all these, that's the target. That's what happens. You know, this is the perfect example. Broke below, hit that, bounced off. That's what we'll be looking for these. Break below 340, look at 299. If it hits that, look for a load, bounce, technical bounce play. Major red flag if the 50-day simple moving average fails to hold for these stocks. I mean, it's a huge red flag if the middle Bollinger Band fails to hold. It's not what anybody that's bullish on the marijuana sector wants to see. Okay, look at OGRMF weekly chart. It has the bearish engulfing. You know, once again, notice how they're all forming the same patterns. Notice the giant volume bar. You know, notice the long upper wick from high of day. I mean, these are all signs that the big players were locking in gains. Once again, it's all about EMA4. If the share price drops below this 339, the EMA4 pink line support level, that's going to be your bearish change in trend. You know, last time it did that, dropped to EMA8. That'd put it at 315. If it drops below EMA8, more than likely it's going to go down to that middle Bollinger Band. That's what I would think. You know, it could bounce off of EMA 13, and that's what they do many times. But it would just be a really red flag for the sector if you know, they broke below EMA 8 on the weekly chart. So and notice that they're trading in unison, many of these stocks. So you know, they're likely to trade in unison on the way down as well. You know, they'll trade in sync. And so if you look here at the ATTBF chart, notice that there's a slight uptick on accumulation distribution down here. Not much, but there was not a spike down. It spiked up slightly. Well, it was down on the day. Notice the ATTBF here. Yeah, they had been, you know, down 10% on Friday, and it was down every day last week. You know, just a bloodbath, right? So down at 5 days in a row. And then look at the lower wick on Friday's candle. They were bottom feeders, you know, so people were trying to load off of a low of day down there, off of 38. It closed below the middle Bollinger Band. And so that's what I was talking about. The stocks that aren't as good are breaking down harder. And so notice that 48.5 is the key level. It has to get back above that level and turn it into support. If that turns into resistance, that could signal the start of a downtrend. And then you're looking at a pullback down to the 50-day simple moving average at 31. I mean, that's what happened back here in December. It broke below the middle Bollinger Band, bounced off the 50-day simple moving average and got moving again. So that's the downside risk, that it drops all the way to 31. So keep that in mind. Notice it's also lined up with that lower Bollinger Band. If you look here at the weekly chart, you can see it has the bearish engulfing reversal pattern again. You know, the same pattern. You have the white candle followed by the big engulfing red candle. It did close below EMA 4 at 45. It'll be a red flag if 45 turns in resistance. Notice it bounced right off of EMA 8 at 39. Big support level. You know, the downside risk is it comes down here and tests these moving averages if support breaks. So yeah, it has a good uptrend going, and they all do. It's just, you know, we're just on the lookout here to see, you know, are they going to break down further, or are they going to hang in there? You know, I think if the you know, the U.S. passed some strong legislature, it would probably embolden people to start loading again on these marijuana stocks. Okay, let's look at EMMBF. So it's down 16% here on Friday. Yeah, so this stock, you know, it's one of the weaker ones in the sector. You know, it had taken a while for it to get going. It finally took off, and then now it broke out. You know, broke down again. Notice that there is a gap on the chart. So if it does bounce here, you shoot for the gap fill as a potential target, and so up to about 177 would fill the gap. The top of this, the second red line. Notice that when it came down, it bounced right off of the 150 and 200-day simple moving averages. That's the gold, green, and red lines. As long as they hold, as long as it stays above 143, that would be bullish. You know, or it could potentially have a technical bounce here. You know, if it drops below, that's going to be a big red flag. It's below the middle Bollinger Band right now, so it is a risk to hold. It could start a new downtrend. It has to get back above 167 to get a new uptrend going. Notice the big volume spike on Friday. And then finally, let's look at the EMMBF weekly chart. You can see here how this one, you know, it pulled back since it started trading back here in December, and you know, it ran up and then it pulled back. You know, made the double bottom, and then it finally got moving, and now it's back down below the 50 days or 50-week simple moving average. 164 is the big level on this chart. It needs to close above that level and turn it into support to head higher. 143 is the key level to hold. If you see it drop below 143, that's going to signal more consolidation. It's back in the sideways channel now. It had temporarily broken out of it, and so it looked like it was going to finally want to push higher, and then, yeah, it got sucked right back into the channel. So you can see here it had been in a multi-month sideways channel. It broke out in December. You know, it was pushing higher in January, and then now it dropped back into the channel. You want to see it get out above the top of the channel if you're a bull. You want to see it above 160. Okay, there you go. That's a look at the Canadian marijuana sector. If you'd like to learn more about charts and technical analysis, come check us out at our chat. I'll post the link below the YouTube video. Okay, thank you.